So the fun question, members, is if money was your spouse, how would you describe the relationship? That's a question. So you can chat your views on email, on the chat box. Waiting to see. I hope they are able to chat.
Yeah, so I can see a few messages. Someone had just said had relationship.
Thank you. Bad relationship, honestly. Emmanuel, any other? Thank you, Emmanuel. Thank you for your feedback.
Someone else mentioned strained.
Strained, I haven't seen that.
Delicate.
Delicate.
Excellent, malnourished.
Okay, where are you reading that from?
Separated from the church. Separated.
Okay. Separated. Elusive. Josephine is very cordial. Amazing. Agnes is elusive. Others are saying separated. Huh? Sorry?
Others are saying unstable. Others are saying partial.
Huh? Yeah.
Others are saying love and hate relationship.
Complicated. Yeah. Okay. So what I want to say is that the way we relate with our spouses will be the way also we relate with resources. And resources around us, if you don't know the value and the purpose of what you have at hand, then abuse will be inevitable. And anything in an abusive relationship will always have separation, including money. Anything in an abusive relationship will always have separation, including money. Now, one of the reasons why then people put up or consider endowment funds is to be able to have a structured framework through which they can be able to manage financial resources in a way that sustainably creates a value into the future for their interests, for the economic interests of the communities around. And so that's what I want us to talk about, that in an endowment, endowments are basically permanent assets which can constitute money, securities, properties that are invested in a way, in a structured vehicle to earn income. And out of those investment income that you generate, you are able to apply those income to certain objectives that you come up with, that you desire to achieve at your level. And some of the benefits of putting organizations would set up an endowment is one, sustainability. An endowment can enhance the ability to plan for the long term and to meet the future needs of constituents. Also, number two is autonomy. So you separate yourself from the funds, and by the way of putting them in creating independency from yourself on those funds, you also safeguard yourself from the vulnerabilities of making use of those funds for reasons that may not be intended for. But also shared value to be able to cut down on costs and then create cost efficiency as well. Now, the core elements of a gift agreement in terms of when you put up a gift, like you are receiving a gift that is going to be put in an endowment, the donor has to be clear about the purpose. You have to be clear on funding the source, especially the source, so that you tackle issues of money laundering. This is in compliance with the CBK regulations if you're in Kenya, and also the capital markets regulations. And the same will then also apply, I imagine, in also in other countries like Uganda as well and Tanzania. It has to be acceptable and authorized for acceptable and authorized uses. You have to check around in terms of the administration structure, the spending authority, the donor requirements in terms of reporting, and what is any requirements around amendment, and also who are the authorized signatories. And types of planned gifts, we have the you may have what we call current gifts. In the current gift structure, the current gifts are those given and received now. But examples of current gifts include cash, stocks, bonds, real estate, personal property, and the donor simply sends or brings the actual gift to your organization or signs papers transferring the assets to your organization. So deferred gifts are gifts are decided upon or given, but not now, but received by your organization at some time in the future, often at the end of the donor's lifetime. The most common deferred gifts is a bequest, and the donor makes a provision now in his or her will to benefit your organization, but the gift is not received until after the donor's death. Just a minute, I think there is a bit of noise. Other thing then I just want to make mention is that we have split interest gifts. I hope you can hear me. So the split interest gives this split interest gives share benefits with both the donor and the organization. There are many types of split interest gives. Each has numerous financial responsibilities, and some are very sophisticated and can be also complicated. Just one second. Sources of funding for endowments. There are multiple places where organizations can turn in order to raise funds for an endowment. At the local level, there is potential for raising endowment funds. So we have government, we have private sector, you have wealth individuals, we have membership fees, we have general public, and it can also be earned income as well. Then you can also have sources of funding for endowment at the international level, could be bilateral, multilateral overseas development assistance, can be NGOs, international foundations, multinational corporations, wealth individuals as well. How endowments work funds is that you receive a gift, and in the gift you have an establishing gift is made and forms the principal. And then you have invest. Once a gift is received, there is those funds are then invested. The principal is protected and invested and grows. So then you have a grant. A portion of the fund's value is distributed annually forever. So that's basically how then the endowment funds work. So the process of creating an endowment is you create by way of stipulating in the policy framework what are the objectives of the endowment. And then the next thing you do is you fund it. Then after funding it, you invest. Then out of the investment income you have earned, you distribute, and then you are able to spend for the cause that you created the endowment. So steps to establish an endowment fund is understand what endowments are and how they function, weigh the benefits of establishing an endowment at your non-for-profit organization, and then put people and systems in place, including governance, which is a key one, and being clear in terms of the strategic intent that are required for that. So types of endowment funds, you have term endowment. You can also have restricted endowment and restricted endowment, and also quasi endowments. In terms of term endowments, the funds can only be expended after a particular time or event. And restricted endowments, the organization has the freedom to invest, spend, and distribute the funds as it sees fit. Quasi endowments, the earnings are distributed and also based on the specifications of the donor, and the fund serves a specific purpose. Restricted endowments, the capital of the endowment cannot be spent However, the earnings can be expended based on the donor specifications. Bwire, I think at this point, maybe you want to launch just to have a commercial break. Would that be okay? Any other,
Yeah.
maybe you are Paul? I think so.
Yes. Yeah, that's
And
fine. I'll be
I'm sure
launching the
you
next
can have
question.
some, yeah,
Yeah, yes, Simon, I'll be launching the second.
on the poll. I don't know how to extract it, but it's just so interesting to see that about 64% have moderate understanding of endowment funds, 6% have advanced, and 30% have limited knowledge. And this is very interesting. I'm sure later on, Mr. Bure, we can be able to speak a little bit more into the feedback there. So benefits of endowment fund to the organization is generate an ongoing source of income, create stability that counteracts ups and downs, especially like the economy can be up and down. And sometimes we have what we call donor fatigue. Donor fatigue means that sometimes you can get generous project funding. Sometimes because of global financial challenges, there can be fluctuations, but the needs remain on the ground. And by having an endowment, then the income that generated from endowment helps to fund the objectives of the existence of your social impact funds that you have on the ground. Also enhance an organizational prestige, appeal to the donors who want to leave a legacy, release pressure on the annual fund, allows program expansions, provides independence, offers flexibility for management, and builds pipeline of future gifts. Now, when it comes to now getting started in terms of you are setting up an endowment, then the thing is that first get your organizational readiness to support an endowment. And ask some of the questions you ask is, do we have buy-in by all the stakeholders? Do we have governance structure like the board? Are they ready? If you find they are not, then it helps to build awareness and check what are some of the infrastructure you need to have, internal team members, capacity building, technology. Are we in alignment with the vision and the why of setup of the endowment? And some bearing in mind that some of these you may not have capacity, but you can outsource, you can partner with institutions like KCDF who can be able to give you a framework of ability to be able to achieve your core objectives. And how will we manage, how will we manage the endowment? Are some of the questions you'll have to ask. Will we make investment decisions in-house, or are we able to partner with a fund manager like KCTF? Do we have the right systems in place to track, especially even in terms of customer support, reporting framework, technology, investment accounting, to be able to handle the processes of investments? And where will endowment support come from? Have we identified and cultivated donors who are excited to help get this endeavor off the ground? The fundraisers equipped to handle endowment-related CUBES conversations. So who manages then the endowments? The ultimate responsibility is then the board that you put in place, and that board then has a mandate to give guidance and direction in terms of investments. An institution that has an endowment may have an internal financial manager or hire an outside fund manager to work together on a contractual basis within the framework of the investment policy that you put in place to be able to achieve the investments. So how does then what are some of the policies that you then need to have in place? You have to have an investment policy, and probably in subsequent, these notes that we'll share, Gloria, we will add in a section for details more on investment policy and how the investment policy operates. How do you design the investment policy? Basically, the contents of the investment policy would contain what are the objectives of your investments, what are your cash flow requirements, what are your risk tolerance levels, what are some of the restricted assets you cannot be permitted to put your money to, and also what are some of the um, uh, performance benchmarks, what is the pricing structure by way of the fee that the fund manager will get, and how do you measure performance. And some of the investment policies I see around, you would say, maybe I'll do 70% or 80% government securities. Predominantly, if it's in Kenya, you will get a return of around 15% long-term bonds, 10-year bonds, and the cash flow that is generated from the interest from the government securities then is used to fund your activities at the endowment. A portion of them, the funds then can be placed in what we call stocks, and stocks can be maybe like Safaricom shares in Kenya, or Uganda, maybe MTN Business or any other stocks that are listed in the NSE. For endowments, it's highly advisable you don't get into risk assets, maybe like private equities or what you call real estate investment trusts, or maybe just say very high risk. So you have to check balance risk return objectives as well in terms of endowments. Some of the policies that you need to have in place is the withdrawal policy. For example, establish the amount the organization is permitted to take out of the fund at each periodic interval, can be quarterly, can be annually. Also, what is the usage policy? Identify the fund purpose and ensure grant making is adhering to these purposes, both appropriately and also effectively. Registration requirements for endowment fund. Private charitable foundations in Kenya are mainly incorporated as companies limited by guarantee because the owners enjoy the benefit of limited financial liability. Such foundations can be also granted tax exemption. But as to the legal structure, I think this is an area that we have another session in the afternoon where the lawyer will come in to be able to talk more. A charitable foundation under Kenyan laws can be established either as a company limited by guarantee or a charitable trust. Now, I know also that setting up trust in Kenya cannot be a very easy one, but let's see. Sometimes it's quite possible that you can get that process going through. So under the laws of Kenya, foundation can be incorporated under the Trustees Perpetual Succession Act. Chapter 164 of the laws of Kenya, Section 41, provides that trustees who have been appointed by or a body or associations of persons established for any religious, educational, literacy, scientific, social, athletic, or charitable purpose, or who have constituted themselves for any such purpose, may apply to the minister for a certificate of incorporation for the trustees as a corporate body. In this case, then the trustees become the legal owners of the trust assets. They act in the best interest of the donors' objectives and the beneficiaries of the trust as well. Now, the trust objectives are then espoused in the statutes that are setting up, that will then be for the setup and establishment of the trust. And the trust itself will then constitute issues to do with um, um, things to do with what are the objectives of the trust and what are the permissible usage of the trust benefits, and what are the powers of the donors and the powers of the trustees. What are the investment policy guidelines within the trust, and how would reporting happen, and also how do you appoint service providers, and also how do you engage with the various stakeholders in the trust as well. Now, generally, in the trust, you give the naming of the trust. What are the main objectives? A charitable trust must fall in at least one of the following categories: advancement of religion, healthcare or saving of lives, advancement of environment, protection or improvement, advancement of education, advancement of health or advancement of environment. I think we have a repetition there. Homes, orphanages, hospitals, trust beneficial to the community, not falling under the proceedings heads, e.g. advancement, art, culture. Name of the settler need to be clear and all the donors well, together with their jurisdiction and their identities. Obviously, this is part of the KYC for compliance with the anti-money laundering provisions of the law. The registration requirements of a charitable trust or foundation in Kenya generally requires the following: beneficiaries. This could be a class of persons in the society as widows, orphans, vulnerable children, pride children from poor backgrounds, or trust fund, a list of assets held by the trust in the absence of a deed of donation indicating the properties to be donated to the trust, or a letter of stroke statement from the donor stating his or her commitment, and the transfer of properties funds may be progressive but indicated the initial amount of properties to be transferred. Okay. Trustees, so we have the trustees should show competence in running then the trust assets itself. The following are some of the details that may be required: name and address in full of the persons to act as trustees, passport photos of trustees, KRA PIN, or in this case is in the Kenyan context, Kenya Revenue, copies of the ID, CV of trustees, a statement of the accounts, minutes appointing the trustees, and a petition to the minister, and the seal of the trust, statement of the donor funding where applicable, and financial statements of the foundation of the trust itself. There also has to be consideration of the trust. Additionally, it's important to consider whether standard procedures are appropriate or if there are any special administrative procedures required. Below are the administrative procedures in the registration of a foundation, which I have already gone through, I think, and given. One of the keys, basically the powers of trustees and procedure for conducting meetings, and also amendment of the trust deed. Registration of a charitable trust may involve two stages. So we have registration under the Registration of Documents Act or incorporation of the Trustees Perpetual Succession Act. However, I would want to say that this particular legal part will be ably covered in depth by the lawyer who will be coming in the next session. I think with that, I am grateful for the time you have permitted me to be with you, and I'm happy to work with you to hear any other considerations you may have. Questions and answers. Our contacts are given there, and happy to take any questions. Thank you.